Hi, everyone, and welcome to the Texas Mortgage Bankers Association's Education Webinar Series, a part of the Education and Endowment Committee led this year by co-chairs Hannah Barton and Stephen Bertrand. I'm Stephen Bertrand, and I'll be facilitating today's webinar titled Digital Closing Table, Exploring eClose, eNotes, and RON in Mortgage Lending. TMBA invites you to attend its Education Symposium this November 4th and 5th at the Hilton Dallas Lincoln Center Hotel. The committee is crafting sessions with industry leaders and experts that will give you the latest news and trends in the mortgage industry. There's still time to take advantage of the early bird registration prices. Also, those attending today's webinar will be receiving a special offer next week, so be on the lookout for that. We'd love to hear from you during our webinar today. Please feel free to ask questions throughout the webinar using the Teams Q&A. Now I'd like to introduce today's moderator, Dan McGrew. Over the last 12 years, Dan has guided mortgage lenders through their digital journey transformation. Dan works closely with lenders to understand where they are in their journey and helps them prepare for a successful digital transformation. Dan works closely with LOS providers, document generation providers, e-closing platforms, and eVault providers to ensure his customers have the necessary tech stack to successfully make the shift to digital. This process also involves assistance with MERS e-registry setup, meeting with all lender counterparties, as well as equipping his lender customers with knowledge and best practices of how to move from a traditional paper-based process to digital, including e-closing of all types. Over the last 10 years, Dan has worked with over 120 lenders interested in making the jump to E. Previously, Dan was COO and managed sales at Pavaso, an e-closing provider. Dan implemented sales strategy, developed marketing plans, and was directly involved with lender customers during the sales process as well as implementation. When Dan joined Pavaso, they had 3 customers. He oversaw the growth to 76 lenders during the time there. Dan has over 30 years of experience in software consulting and guiding customers through change management, project management, and helping customers with adoption, both internally and externally, of their new software. Dan specializes in determining e-readiness of mortgage originators and focuses on putting lenders and their team in position to succeed in the journey to digital. Okay, let's get started. Dan, the presentation is all yours.
Thank you, Stephen, and welcome everyone today. We're very excited to present the information about e-closing today for you. Have a great panel. Let me start with introducing Jeff Bode. Jeff is the chairman of the board, chief executive officer, and president of Click and Close, formerly known as Mid-America Mortgage. Having been in the mortgage banking since '81, Bode founded and ran the original iteration of Mid-America Mortgage in 1989. During which time he also became the first lender to develop an interface inside Calyx Point. In 2003, Jeff sold Mid-America to Aegis Mortgage and focused on developing a mortgage developing mortgage machine and proprietary loan origination system and creating tax lien business, which originated the highest amount of loans of all single-family tax lien companies in Texas the first 2 years. He re-entered the mortgage market in 2007, and in 2010, he purchased Smith Mortgage Company and reorganized its operations to incorporate the loan production of another mortgage operation unit he managed prior to the acquisition, resulting in the reemergence of Mid-America Mortgage in 2011. Mid-America Mortgage was the first independent mortgage lender in the nation to implement electronic mortgage closings, e-closings, and in electronic eNotes through its retail, wholesale, and correspondence divisions. In 2022, Mid-America sold the majority of its retail lending division and rebranded to Click and Close. Under Bode's leadership, Click and Close has become a pioneer in the digital mortgage space. Click and Close is a direct-to-consumer, ultra-secure digital mortgage platform to get home buyers from application to closing within 2 weeks. Just a few clicks at closing. Click and Close puts the keys in the home buyer's hand in 15 minutes or less. Jeremy Dean. Jeremy is co-founder of Elite Title Company. Jeremy has an extensive career in residential lending real estate spanning 23 years. He has spent time in operations, sales, and management in the mortgage and title sectors. He and his wife currently own a mortgage company, a title company, and an appraisal company. With mortgage and title, they are pushing the narrative of fully digital closings to the entire industry. Jeremy serves on the board of the TMBA and is currently pursuing his doctorate in business. Wow. Leah Sommerville. She is the Enterprise Solutions Manager at DocMagic. She is proud to lead DocMagic's eClose team and serve as an Enterprise Solution Manager responsible for DocMagic's robust suite of e-solutions. Leah focuses on strategy, development, and promotion of innovative lending solutions to implement new digital standards for industry practices, which directly result in improved mortgage process and a significant ROI for clients. She has led the efforts for multiple digital closing platforms, focusing on e-closing, e-notarization, eNote, eVault, the Mersey Registry, and investor e-delivery. After effectively pioneering digital process changes for over 700 organizations, Leah is respected as a thought-leading digital transformation coach. Her consultative approach has empowered her to shepherd lenders' successful transition from paper to digital processes, and she ensures clients experience all the benefits of the industry's most comprehensive total eClose platform. All right, let's get started. First thing we want to address is let's just make sure everyone understands what is e-closing. So I'm going to start with you, Leah. Could you give us an overview of e-closing and what that actually means, please?
Absolutely, Dan. Picture this. You generate an eClose transaction and borrowers are immediately invited in and have the opportunity to review their documents electronically as often as they'd like in advance of closing day. Now, settlement agents are also automatically invited into the eClose process, and they have a dedicated eClose console where they can review all of the lender's forms and also add title documents into the eClose transaction. So then on closing day, all signing participants receive an email and have an opportunity to e-sign all of those documents that don't require e-notarization on their own. So they can do that at the convenience of their office or homes. And then, depending on the version of e-closing, they can join the e-notary from virtually anywhere that they have internet connection. Now, when the e-note is signed, it's immediately deposited into the lender's e-vault and registered with MERS. So we found that the eClose experience expedites the borrower's workflow on closing day to an average of 15 minutes. And then think about it with those e-notes. If they're immediately deposited into your e-vault and registered with MERS, then that means you can also e-deliver them on the evening of closing to your investors. So that loan is on its way off your books.
Okay, that's fantastic. Now let's get a perspective from that's coming from the software side of the house. Jeff, what do you think about the process of e-closing? Does it work like she says?
It does, but actually for the lender, I think it's even better than that. We started doing e-closings in 2015. Actually, we used the DocMagic solution. In 2017, I acquired another lender that was about the same size, doing the same amount of volume that we were. We had 3 people in post-closing. They had 27. We got our loans bought on an average of 8 days. They got theirs bought in 26 days. So you can imagine, and the reason that happened is it reduced mistakes, but it works every bit as good as what Leah said, maybe even a little better.
That's fantastic. All right, Jeremy, give us a perspective on the title side. What your thoughts are on what the e-closing does and what the process is, good and bad, for the title folks.
Yeah, there's certainly a ton of advantages. The list of advantages is about a mile long for everybody, right? For title, for buyers and sellers, and for the lender. In addition, so one real important component is the speed and the convenience, right? So if we're talking about getting these buyers signed in 15 minutes or so, sometimes even less, that's hugely important to our customers, right? I don't know that anybody out there, if any, most of the people on this call are probably, lenders in the lending space. If you said, hey, Mr. and Mrs. Customer, my borrower, could you give me an hour of your time, or could you give me 15 minutes of your time? Who's going to say, sure, I would love to sit and close for an hour. So the convenience for the borrower is significant. And where the title company plays into that is, I tell lenders all the time, we all hear this phrase of like, hey, first impressions, right? So when you're trying to win business or whatever, the first impression is super important, right? Well, sure it is. Well, so is the last impression. And the last thing that customer does before they move in is come to the title company and sign. And what you as a lender do not want is for them to walk out of the title company and think that process was miserable. Because even though the prior 3-4 weeks might have been great, the last thing they remember is signing a stack of papers this thick and how much of a pain in the butt that was. That is a direct reflection on you as a lender. So you want that last impression to be really, really great to the customer as well, even though they are here at the title company, or in this case, if it's a Ron or whatever. And that, I think for the lender, that's going to go a long way to solidifying, future referrals and positive memories for that client, with that being the last thing that they do before they move in.
Okay, thank you, Jeremy. Leah, just one last closing question on this particular part of the topic here. You have lenders that can do a wide variety of e-closings that they're still e-closings, right? From the hybrid on the front end to, even e-notarization as well as eNotes. Okay, what do you find, but with lenders today, current day, what do you find that their appetite is more? Where do they gravitate more towards?
Yeah, Dan, when you mention those different versions of e-closing, we realize that e-closing isn't one size fits all. So I would say that most lenders are at least doing a hybrid number one version of e-closing, where we e-sign about 90% of that closing package, all of the ancillary docs, but we still paper out the note and notarization. I think the last study I saw from MERS, or in one of their monthly newsletters, was that we've got about, I think it's between a little over 7% of loans now include an eNote. So lenders are certainly getting towards that completely electronic workflow where everything is e-signed, but they get to decide which version of e-closing they're going to provide on every single loan. So it's hard for me to say that, they've gone, completely E, or they do a lot of hybrid threes. It's pretty all over the board once we get past that hybrid one. Hybrid one is kind of a freebie, or, really no barriers there.
Right. Okay, good. All right, moving on. Adoption to the process. We've all three of us have discussed this and talked about this in the past. Jeremy, what's your perspective on why the industry as a whole has been a lot slower to move than folks like Jeff would say that he thought that it was going to happen, many years ago? What would you say the biggest challenges have been for lenders to adopt this, as well as title?
Yeah. I've been trying to find the answer to this elusive question for 18 months. I mean, Freddie announced that they would start buying eNotes well over a decade ago, almost 20 years ago now. And so it's not like this is some new, AI Bitcoin thing that like nobody's ever heard of, or, people are scared of. eSign and UITA acts from 1999 and 2000 kind of introduced what a digital signature can do just in general, right? Well outside of real estate. So for the last 18 months, Dan, I've asked this question to probably 50 lenders. If you're not, when Leah showed that chart, on the fully electronic, fully paperless, right? If you're not on that last section where you're doing eNote and eNotarized docs, then why? And I hear lenders say all the time, oh, sure, we do digital closings. And it's the hybrid one that Leah talked about. So I would ask the question, why? And I've got a pretty wide range of answers, but some of the most common ones are we don't have enough investors to sell to. There's still a lot of correspondent investors that will not buy them. So that's probably one of the biggest ones. Title companies that won't support it, which, as a title company, for us, it's your docs, right? It is your note. It is your docs. I shouldn't really have a say in the matter. If you come to me and say, hey, I've got DocMagic's platform, I can invite you in. I should not have the ability to tell you, no, I'm not going to do it. Right? This is your loan. This is your collateral. This is your borrower. These are your docs. So if a title company says, hey, I'm just going to reject the invitation I get from DocMagic's platform, I'm just not going to sign it, then you need to find a different title company. So title companies really should not be the barrier here. And then the other ones that I commonly hear are, is it technology? Is it software? Is it cost, right? How much does it cost to get my eVault set up and all those types of things? But Dan, I will tell you from my perspective, 18 months of having these conversations, here's my 2 cents. right, wrong, or indifferent. I think the biggest barrier to this is just a hesitancy to change. It is the if it ain't broke, don't fix it mentality, right? What we are doing is working. Like Leah said, the MERS numbers come out every month. We're at 7-8% industry-wide adoption. That is a very low number. And I think from a lender's perspective, it's, well, what we're doing is working. Borrowers are not screaming for it. There's not a ton of demand. Well, borrowers weren't screaming. I mean, customers weren't screaming for the iPhone in 2004 either, right? Because they didn't know about it. So it's a lack of awareness. It's a lack of education. And I think it's just a resistance to change.
Thank you, Jeremy. Well, Jeff, I want to get your perspective because he's talking about your peers. What do you think the biggest challenge has been and why it is taking people and is still taking lenders so long to adopt this technology?
It's just, I'm just completely shocked. I honestly thought when we started this years ago that in 2 years, everybody would be doing it, that the savings we've achieved are so far beyond anything. I think we spent like $25,000 to incorporate our signing platform with DocMagic, and that was, we were one of the first, or we're the first one. So I don't think it's a big deal. And I think there's more competition for DocMagic now that, you know, that the price is pretty reasonable. I just don't get why it hasn't occurred. I mean, the savings we garner are, you know, what is it? Notarize had a project and they analyzed this about 3 or 4 years ago, and there was about $440 per loan. I think that's high. I don't think that's high. I think we saved more than that, especially with opportunities to move loans through to the GSEs quicker. We've got one lender that doesn't take eNotes that we sell the bulk of our product to, and we have a pretty sharp pencil when it comes to selling our loans, and we have found that to be much easier to sell to investors. And typically, you tell them it's eNotes or nothing, they're going to get there. Matter of fact, the one lender that doesn't take eNotes is working on a pilot to get there.
One other question I have for you, Jeff, if you could, I recall a conversation the two of us had a few years back, and I was asking you, you know, how, you know, when you first got started trying to implement it, you know, it wasn't the easiest thing for you in the beginning to get people to adopt it. All right. Tell the story of what actually happened that caused that to change from your previous experience.
Well, probably the biggest problem I had initially was just my own staff. Just did not like the idea of change. And, you know, I'm the owner of the company. So instead of being a democracy, it's a dictatorship. And I just said, we need to do this. And my employees embraced it pretty quickly. And then, you know, in the second month we were doing it, so why would we do a paper closing? Why would we go back to that? So they embraced it quickly, and the loan officers were very reluctant to move forward on it. Probably my last movers were my wholesale account executives, and it was frankly because of their ignorance. They didn't want to look stupid. So when somebody asked a question, they had never really been through the process. We didn't make them go through it, and then ultimately, we made them go through the process, and they've got most everybody. There's one broker in Arkansas that hasn't embraced it, but other than that, everybody's on board.
Good. Okay, thank you very much for that. Leah, let me ask you this question. You've got significant experience working with lenders. What has the feedback been as to what the advantages for those that are producing eNotes that they would tell you and have told you that eNotes are superior to producing a paper note?
Oh my gosh. They love them because they don't have to worry about losing those eNotes. I had some lenders down in Louisiana, and when that Hurricane Katrina came through, you know, they were paying people hundreds of dollars for every note they found on the ground in the streets. eNotes are virtually indestructible. They can be instantaneously e-delivered, and they have an audit trail so you know exactly what's happened. And then I would say, although we kind of mentioned how eNotes can expedite time to funding, even before we get to post-closing, closings that include an eNote close 2 hours and 37 minutes faster. That's a fact from MarketWise. So I like to look at numbers, and they can tell me all day how much better the borrower experience is. For credit unions, they really care about those members, and I respect that. But when we can prove that ROI on the bottom line, that's what's indisputable, I think.
Right. I agree. Jeff, I'll ask you just one, and then I'm going to come to Jeremy with another topic. You've done both. You started out doing the hybrids, and then you went to the eNotes. From a lender perspective, do you consider that eNotes are vastly superior to the paper notes?
I certainly do. A case in point of something that goes wrong. FedEx does a great job. I'm not going to belittle them, but whenever that bridge went out in Philadelphia, there was a case where we had, I think it was about $25 million worth of correspondent loans that were paper loans. And they were on a FedEx truck on the way to a spot in New Jersey, and they couldn't get across that bridge. So everything went back to, to Atlanta, where FedEx's offices are. We didn't get those notes back for over a month. So we were sitting there paying interest on these notes with the inability to sell those. So it's just so much easier. And if you're dealing with Freddie Mac, they will actually buy the note the same day. One example of why this is better is back in 2020 and 2021, when business ramped up really fast, we couldn't get our warehouse lines increased quickly enough because they just didn't have the capacity. And we used our own cash to fund our eNotes and got those bought either that day or the next day. And we just saved our Ginnie Mae production. That was before Ginnie Mae accepted the eNotes. We did that and securitized those loans. So we just kept our warehouse lines available for the Ginnie Mae. And we were doing at least 50% of our business was on a conventional basis. So it just really is, as a business owner, it is just such a tremendous benefit. And so much easier to move loans through, even on the now with Ginnie Mae, we get our loans into securities much faster than the paper notes. We buy loans on a correspondent basis, and those paper notes take about a week longer to get into a security than the eNotes. So regardless of how you're doing this, it's just a lot faster. Now, I don't know if you're selling to aggregators, I'm not sure if they've gotten the process down where they're smooth in getting them bought, but certainly if you're going to the GSEs, it's better, but you will never lose one of those notes. You'll never have to pay somebody to search for a note on Bourbon Street. It just isn't going to happen.
Jeremy, one of the things that you and I have talked about this before, but when I first started, it was easy for the lender to blame the title company. My title company didn't want to do it. And you did a great job of responding to that earlier. What about this? This is a challenge that I've personally heard a bazillion times on the title side, is that, well, it's hard for us to embrace this because there's so many different eClose platforms in the marketplace. How, are we supposed to get educated and bought onto each one of them? That's just almost an impossible solution for my people. How do you respond to that?
Yeah, that's a great question. So, the Fannie Freddie, they publish a list on their sites of the approved platforms that can do this, and there's not a ton. But yeah, if you wanted to consider having a title agent or an escrow officer be well versed in every single one of those, that would be too much to ask. So then it comes down to, like I said earlier, if you're going to tell me as a title company, hey, this is the platform we have, the deal is closing with you, we don't really have a choice. It's not our responsibility, or we don't have the ability to say no to that. However, what you probably will get from title companies is a lot of pushback. And they may not even, they say, hey, I don't want to work with you, or maybe I don't want future deals from you, or whatever. The reality is, with a lot of these platforms, especially the bigger ones, like, so DocMagic is one of the bigger ones, and some of DocMagic's competitors, another thing that they're doing is they're bypassing the title companies completely. And so there are a lot of websites that will have third-party notaries, right? Like Proof or whatever. And so like UWM, for example, will do this, and they will just bypass the title company. Now it's our job to close the transaction, right? That's what the escrow fee is for. We are getting paid to close and fund that deal. But with some of these platforms, it is easier for the lender to just use a third-party notary, and the title company is not involved in the actual signing process itself. I don't particularly prefer that. In Texas, the online notary is a separate commission from an ink notary. So we have all of our employees maintain their online notary commission. So we want to be the signer on that platform on 100% of our closings. We will not ever use a notary from a national network like Proof or whatever, because we want it to be our people talking to your client. But that's just how we operate. So at the end of the day, Dan, I think it's unwise for a title company to say, "Hey, I don't want your business because I don't want to figure out how to log into XYZ platform." And there's not that many, right? There's really only a handful, and they kind of all function in somewhat of a similar manner, right? There's a closing session, you get an email, you log in, you join the session. It's really not that difficult.
With its challenges that are created, I mean, because it's for most people that haven't done this, it's new, okay, and I agree 100% with what each of you have said. It's change. I mean, that's why I'm in business and helping people through that process. Leah, let me ask you a question. Have you ever met a customer, worked with a customer that wasn't a customer, became a customer, and then started using your platform for, a year, and said, you know what, we're going to go back to the old way of doing business? Have you ever experienced that?
Absolutely not. No, they won't even question it. No. And I think Jeff made a really good point. It is very helpful for adoption when that change management comes from the top down. At the same time, I'm in middle management, so I don't always have that much, power. So I think also it's very valuable have malleable employees, because once they start doing this, managers aren't going to go back because they see the cost savings. And then the employees aren't going to go back to other ways because it makes their jobs easier too. And so they can close more loans.
Very good. Very good. Okay. Switching topics here. Let's talk about Ron for a second. What has been your experience with Ron, Jeremy?
It's amazing. We do Ron for sellers quite a bit, just because I don't have to ask anybody's permission on that, right? So we have a CE class that we teach to agents, and we show them and teach them how to win more business and build their pipelines by offering digital closings to their clients. But what I have to tell them is, listen, on the seller side, if you're the listing agent, I can do this nearly 100% of the time, except with a very few small exceptions. On the buyer side, I'm going to tell them, hey, it depends on your buyer's lender, right? If your buyer's lender comes to us and says, hey, I don't have the ability to do a Ron, I don't have the ability to do eNotes, then I can't do it, regardless of, I mean, I have all the software in the world, but I can't do it. But we do Rons quite a bit. And we've actually got a couple clients that are international. We have some investors and some property flippers. So we've done multiple runs with clients that have signed internationally, South America, Central America, and it is fantastic. I mean, I have one client in particular that is in Peru, and she is nowhere near an embassy or a consulate. And she goes to an internet cafe. She pays like $5-10 to get on their Wi-Fi. She takes her laptop and she's out of there in less than 20 minutes. And for her to have to go to an embassy or a consulate and get those docs signed and get back to us in the US, I mean, this is a week-long process. And we're done in 20 minutes, and we're recorded with the courthouse a few minutes later. And so it is mind-blowing. And to what Leah said a second ago, I would say the same thing is true of the borrowers. If you have a borrower that goes through this process, and you as the lender call your borrower afterwards and say, hey, next time you close, would you prefer to drive to the title company and sign a stack? No borrower is ever going to say, yes, please. That was horrible. I hated it. Give me a stack of papers next time. They're just not going to. And one other thing I would add too, Dan, we talk about Ron a lot, something that gets lost in translation that almost never gets mentioned. When we say digital close or eClose or eNote or whatever, from my conversations with realtors and stuff, there is always an assumption that it is a Ron. It does not have to be a Ron. It can also be an IPEN. It can be in person. That one, like the IPEN, just doesn't really get a lot of love, because I hear from agents, well, I want to go to the closing, right? Or the loan officer. I want to go to the closing. I want to meet my borrower face to face. I want to take them the gift. I want to take a picture in front of your sign. I want to do all these things. But if it's Ron, I can't do that, and it feels less personal. So we would gladly open that up to saying you can come and do it in person. You don't have to worry about the multi-factor authentication. You don't have to worry about the KBAs if you want to do it in person. But to the borrower, they show up here in our office if they want to come here, and we hand them an iPad, and they sign it all on an iPad, and it's like, it's mind-blowing. But the IPEN doesn't get it gets left out a lot in conversation when we talk about Ron. But either way, I've never had an experience where somebody said that sucked, I hated it, don't ever let me do that again.
That's absolutely spot on. Thank you, Jeremy. Jeff, what's your perspective on the use of the remote online notary?
Oh, I am so pleased with the remote online notary. We have been slow to embrace it, though. We are using it for our modifications for delinquent borrowers that are getting current again with those modifications. And that has been a big deal. We've had times where the notary didn't get things done properly or their commission had expired that we sent out. So if you use the RON process, it's perfect every time. It won't go bad. We also use it for modifications on our construction loans and have found it to be very beneficial. We have a title company that we own as well. And whenever we do closings, we push the RON process, and that works out better. I mean, you think about it, you don't have to chase down final docs. You can, with CSC and Simple File, they can file those documents at the time of closing. So, within 30 minutes, those documents are filed. We've got the title policy. We've got the security agreement. We're done. So it just kind of removes a lot of that back office stuff and just makes it so much simpler and easier. So it really, the e-process is just forgetting how to do things you don't have to do with the e-process that you have to do in paper. It removes a lot of steps, and it's just simpler, and mistakes, they don't occur. The things that if you're going to send something to a title company that, you need to have signed, like, say, tax returns, we send it to Jeremy, 30 minutes before closing. Jeremy's busy with some other stuff. He doesn't see that email. And then we get the documents back. We've missed the tax. Hey, it's not our fault, even though we sent it late, but it's problematic for everybody involved. But if we just put it right up, load it right up in our DocMagic signing room, it's accepted. We don't have to chase down documents after. We don't have to get the borrowers to come back into the title company or come to the office or deploy a loan originator to go out and get the borrowers to sign. It just removes those mistakes.
Absolutely. Leah, a lot of people ask the question when we talk to folks about RON, they get very, very frustrated because of the different states, the different laws, regulations about RON. Can you shed a little light on, sort of at a high level about the lawfulness of RON, and then as a state issue, how that all comes downhill?
Yeah, absolutely. If I have to find a rainbow from the COVID storm, it was RON, because that really forced legislators to allow for remote online notarization where we couldn't do things in person. So at this point, I only have a few states that don't allow for remote online notarization. And I used to have all of these resources from the National Notary Association and PRIA bookmarked on my web browser, so I could kind of look this up to advise clients as this was evolving. But I would say that DocMagic takes the guesswork out of what you can do where. We provide an e-eligibility audit that you can run at any stage of the loan to confirm if remote online notarization and or IPIN is permissible in that state, if you can e-record in that county, if you can include an e-note on that loan. So while this is very optimistic to me at this point, not something you have to memorize or take a picture of right now if you have that e-eligibility audit.
So one other question, I'm going to stick with you, Lee, on this, but one other question about RON. Is there certain technology providers that facilitate RON that have to meet certain standards, or that there's some lawful body that governs all of this?
Yeah, different states have different requirements. Some states require the vendor be approved in that state, which requires some vetting out things like that. I would say, I don't want to speak for all eClose platforms, but DocMagic's solution is MISMO certified also. So there are some kind of guiding bodies to ensure that we're meeting, all of the regulations. And different states will require those, most states require those KBAs that Jeremy had mentioned earlier, but not all of them. So you need a technology provider that knows what's required and where, so that your team doesn't have to guess and you don't have a potential error.
So if the lender is operating, obviously which is the next point that we want to talk about, is, but to make sure from a technology perspective, there are some companies out there that have the full suite. Okay, everything from the eClose capability and the ability to produce eNotes, eVault, and then close it utilizing Ron technology. And then there's some that just have a part of that, right? There's some that are not a full-blown, master suite of all that's involved. So from an advice standpoint, would your recommendation be that they should really validate and check with who's approved and who the investors will accept and all that sort of thing? Would you think that'd be a good step?
Absolutely. I wouldn't want to drive a car with just 3 wheels. I need it to have everything to get me the entire way, for sure. So I think you need a solution that can provide everything, even if you're not ready to go completely but you have to be planning for the future at the same time you're implementing today.
Right. Okay. All right, Jeremy, I got a question for you, sir. What's your opinion about the different technology platforms and the importance of seamless integrations and everything that's involved? How do you feel that the importance of that when someone's starting this process to eClose, whether it's whatever the technology is? We hear a lot with lenders that it took them forever to get set up or whatever. I realize you're on the title side. You guys have technology too. What's your opinion about the importance of having seamless integrations when necessary?
Yeah, this is a huge component to it, right? I mean, we're talking about a technology product. This is a digital product, and so the platform that's being used is a massive component to this. And I think this goes back to one of those barriers to adoption, right? If I mean, in my prior years of managing operations at a lender, like when you're switching your LOS, right, or your POS, or you're implementing something new, like this is a very substantial process for lenders. And I think that is one of the hesitancies and barriers to adoption, is there's an understanding, or I should say a misunderstanding, of how much, this is going to require. But if you have the right relationships and the right professionals, people like you, Dan, that can help walk them through this process, and people with, on the investor side, like Jeff, and the platform side, like Leah, it is actually a lot more manageable than I think most people realize. I think there's this assumption that, hey, this is going to take me 3 years and, all this kind of stuff, and I've got to do it. If you want to do it right, then yeah, you got to do your testing, you got to do your implementation and all this kind of stuff. But one of the things that I hear a lot from lenders is, I don't want to change a lot of my processes. I would like to minimize my disruption. And that was one of the whole reasons we launched the title company, is because as a lender, I want to minimize disruption to the lender. So what we don't want is, hey, you have to change your doc prep provider, right? We don't want to tell lenders that, because especially in Texas, as an attorney review state, like if they say, we're really happy with who we're using for doc prep, we don't want to change that. Or we produce the docs out of Encompass and we have the attorney review, we don't want to change that. Then we would say, great, you don't have to. So this is where the integration from the few platforms that are out there becomes really, really in that we want to try to minimize the disruption to the lender. And so if they can keep doing what they're doing, Leah's platform has an incredible, AI component where it'll go in there and they can just upload it and it can read and find all the signature tags, which is like amazing and mind blowing. So I think that is a real important component to all this, Dan, is the misconception that the setup and the implementation of this, while yes, there's a lot of moving pieces, the eMERS, the vault, all that kind of stuff, the things that you would walk through with somebody, Dan, there is a lot of moving pieces. It is not as difficult and as complicated, nor should it take multiple years that I think most lenders assume. And if you have the right people in place, then and have the right relationships, then it can be a lot smoother and faster than people realize.
Very good. Well, I know that, to me, just some common sense here, that if you have, a doc provider that has the ability to provide the various categories of eClosing and Ron solution and eVault, that obviously minimizes the number of integrations that you have to have, which should enhance the confidence for the lender in a lack of security and so forth, which is the next topic. Jeff, let me ask you this. Have you found using the e-closing technology just in general and as a lender that fraud and security, fraud prevention has been something that has been an asset, or has it been a real problem for you with the use of this technology?
That's an interesting comment. Actually, I was working with the Texas Mortgage Bankers Association came up with a model law in 2017, and it went through the Texas House, Senate, and the governor signed it for remote online notary. And the gentleman that was on the other side, that was working with the Texas Mortgage Bankers Association, John Fleming, he worked for a bank doing legal work that I was trying to acquire, and their largest single credit that was in default was on a false notary. And it was just interesting that was their biggest classified asset. I never got the bank acquired, but the solution is we were writing that bill that John Fleming came up with. Let's come out with the KBAs and just all kinds of solutions to stop fraud. And now you're seeing that fraud is to be minimized. It was SIFMA, I think, had made a release, and they were talking about how the remote online notarization was removing fraud from transactions. That who is going to lie and tell you there's somebody else when they're on camera with their voice being recorded? They've got positive identification as to who they are. No way that's going to happen. I mean, you're not going to commit fraud like that, as opposed to a notary that, comes out to your house. Oh, I'm Bob. Yeah, I'll sign it. It just isn't going to happen. So it does remove that. And, my hat's off to the TMBA, because they're the ones who pushed this forward where it became more prevalent and did it right to make it where there's just fraud has been eliminated.
Good. Thank you, Jeff. Leah, let me ask you this from the technology perspective, and I'm not just talking about Ron, but let's just if you would, for the audience, can we give them a little confidence about what measures are put in place in the technology to ensure that there's not a security issue and fraud cannot happen? Can you whether it's Ron or just the e-closing process, can you help these people feel a little more comfortable? Because you and I both know everything's going great. Everyone wants to buy this until the compliance group gets involved. So let's see if we can't make them feel a little better. Can you help?
Absolutely. Anytime a borrower logs in to review those documents or e-sign them, they have to validate their identity by inputting maybe the last 4 digits of their social or the property address or unique identifier that the lender can create or pull from the loan data. And then when those documents are e-signed, we've mentioned like the KBAs, but there's also technology identity verification that requires the borrower submit photographs of the front and back of their government issued IDs, and the technology confirms that they're not fraudulent or expired. Another big improvement from traditional notarization. But then outside of Ron, even after those e-signatures are applied to documents, a tamper evidence seal is placed around them, so those documents cannot be modified. There's also an audit log included within an e-sign and or the eNotes certificate that shows exactly who did what and when. So you can see when your borrower reviewed those docs, when they signed each form. And we also capture the IP address for all of those actions. So there's no disputing who did what.
Jeremy, have you experienced in your ever fraud, security issues that have spooked people to where they're scared to death of this whole process?
I haven't experienced it on deals that we've closed. I've experienced it in, conversational theory. But yes, the conversation comes up all the time. And exactly what Jeff and Leah said, one of the things that we teach agents and lenders and that we teach in our CE class is this is exponentially safer. right? You go into a current closing, you walk into the to the closing room, you hand the escrow officer your ID. They go back to the back, they copy it, they bring it back to you. They are not trained, nor is it supposed to be part of their job to try and make sure that that ID is not fake or whatever. Now, maybe they look at it and match up the picture, right? But there is no method of validating that ID as a valid current government issue ID in the physical in-person process, right? Whereas with this process that we're discussing, there are 3 separate measures of security between ID verification, KBAs, and multi-factor authentication to validate that person. One of the things that does come up and that I have had questions about is, well, cybercrime, right? This is huge, and it's been on the rise for a long time. And wire fraud is a huge deal for us as title companies because we move so much money. So why would you want me to go to a more digital process when cyber crimes and AI and cyber criminals they are skyrocketing right now? So why should we go? Shouldn't paper be better so the notary can meet the person face to face? So we get that question a lot. And I've actually had a realtor tell me, hey, we don't want to do e-closings. We don't want to do Ron because I had a client that it spooked because they thought, cybercrime. Cybercrime is such a big deal right now. And so that, again, going back to the education and awareness part behind all of this, which is we're doing here, is trying to convince not only lenders when they're adopting this, but also the agents, the buyers, and the sellers that this is substantially safer than an in-person closing because we validate who that signer is multiple ways. And that is, as Leah said, a lot of that is procured out of state law. And so once we can help people understand that this is safer, between cybercrime, seller impersonation fraud is really, really huge in the title world right now because everything is going digital, right? So people can create a warranty deed. They can Google it, find one on LegalZoom.com, and then they sign it as the seller. Now they own the house, and then they go sell it for a cash transaction, whatever. And now I got the house. Like that happens. And so working with a title company and doing this process of validating who the signers are almost completely eliminates the majority of that risk, as Jeff said earlier. And so it is like, at this point, it's not even about it. We could argue that it's less about even the convenience for the customer, more so than it is the safety of the customer and the safety of the lender and the property owner, from a security standpoint.
Very good. Thank you, Jeremy. Next question to the panel here. I want to touch a little bit more on the customer experience. I think that what we've seen in time is that I think there's no one that can dispute this, but when the lender is first trying to start this process, whether it's a hybrid or whether it's a fully closing and using Ron, it typically, in my experience, the success of that event has a lot to do with the confidence of the loan officer or whoever it is that is speaking to that individual, trying to educate them on what's going to happen, what's this process going to look like, right? So with people having experience in doing it, the trepidation and lack of confidence will go away because they'll see success stories. But from day one, okay, when a borrower goes through this process, the borrowers that you have, Jeff, is there any way to say, other than if they used maybe a poor technology platform and the documents were incorrect or something like that, is there anything about this process that you would think as a consumer that it's not an exceptionally better process?
Not a thing. I mean, it is just so much better. And I think we've never had a consumer complain about the e-process. Obviously there's some people that are reluctant to the same things that Jeremy identified, but frankly, once they get into it, do it, it's just so much easier. And, with the e-process, they get to see the documents a day in advance at least. And they've got to appreciate that because they're not seeing that CD, which has a lot of their money going all kinds of directions. They get to look at that, analyze it, and talk to people if they have a question. So I think the consumers have appreciated all along. We started doing this, I guess it was 2016. We had some title company push back, but that after they did 2 loans, they were like, why am I not doing this? Because they don't have to have a pile of paper, which the borrowers sign, and they don't have to copy it and send it back to us because we have it in our portal. So I think the consumers, they love it.
Thank you, Jeff. And Jeremy, you spoke on this a while ago, but is there anything else that you'd like to add to, because I think, if I'm running a mortgage company, I want to have someone have a happy experience, good experience, and they're happy when they get their mortgage, so that they'll tell their friends and they'll come back to me, right? So does this help enhance that process, or do you find that it is more of this, it's built with more challenges than maybe it's worth?
I think in the year plus that we've been doing these, I think I can probably recall maybe one transaction where we had a customer walk away not fully satisfied, and the only reason for that is because he could not figure out how to get his camera and his mic turned on his computer, and so we're on the session and he can hear us, but we couldn't see him, and it took him 45 minutes and he had to get somebody to come help him. And so he had walked away like, that was, I didn't like that process. But so, I mean, you can't please everybody, right? And there is going to be a small, probably very small group of exceptions, that maybe think, hey, this process is not for me. And that's okay. That's okay. But I think as a general rule for the large majority, exactly what Jeff said. That was the only customer that I can point to of all the closings that we have done this way that came back and said, yeah, I'd be okay not doing that. And that was because he couldn't figure out his own laptop. So the customer experience is huge. It's huge for all of us. And if they walk away thinking that was convoluted, it was clunky, it was not easy, right? Think of all of us as consumers with all of the apps we use on our phone. We log into our bank, we log into, whatever. We buy stuff on Amazon. If it is not user-friendly, just outside of real estate, if it's not user-friendly, the app, the UX, right, the user experience, we're probably not going to want to use it. We're going to use a different app. We're going to use a different platform. So how friendly it is to the customer and how easy it is for them is hugely important. And that's where the Doc Magics of the world, they spend a lot of time on that. But it does. The customer is not going to go sit down and tell their friends at dinner, hey, you guys should really look at Doc Magic. That's what the lenders are going to say, right? But the customers are going to say, you should use, Jeff, here was my lender and they sent me through this process, right? And so you want the lender to be the one, or the title company or whoever, to have the, for the borrower, right? To have that positive, impression that you leave them with, and then that's where you're going to get those referrals. But I have not yet seen, outside of that one client, a customer that said, I didn't like this, please don't do that again.
Very good. Leah, let me ask you this. I don't mean to put you on the spot because we didn't discuss this ahead of time, so I guess I am putting you on the spot. Do you have a couple of success stories that you can share from the lender perspective? If we were going to, write a case study, do you have a couple in mind that you could share sort of from the time you started working with them to what their comments were, and now that they've got experience with it and what they say today about the whole experience with eClosing?
Yeah, I do, Dan. And if anyone wants to see those case studies specifically, they're on Doc Magic's blog, and they reference Atlantic Bay was a big one, Canopy Mortgage, Superior Credit Union is a case study we've done in just the last about 6 months. All of them are kind of preaching to the choir here. They won't go back to the other ways. So it was interesting when Jeff mentioned earlier how he had an in-house title company. So did Superior Credit Union. So he's one where we brought iPads into our offices, and it's borrowers still want to feel like we're holding their hands. Then they come in for a closing celebration. Granted, now it's 15 minutes and it's done digital. So I think to kind of one of the points Jeremy was making, this is another arrow to have in your quiver. Once you start using them, lenders love it. And I love to see, it's hard. I've noticed not a lot of them do all the cost accounting, so I can shout out all their ROIs, but they'll go through and they repeat the same benefits again and again. The better borrower experience, the streamlined closing process, and the expedited time to funding.
Okay, that's fantastic. Jeff, would you have been one of those people that would have been a great case study with your overall experience?
Absolutely. And it just happened so long ago. I don't think, we give it consideration, but I've never looked back on this and thought that was a mistake. The e-closing process was easily the best decision. And frankly, the $440 per transaction we save, it's real. That's not, if your margins are tight, we haven't lost money, for years. I mean, it's just, I don't think we've lost money since I bought the company. And I think e-closing is a big part of it. I mean, saving over $400 per file is just giant. And then it's just the labor you save as you do that. It's the mistakes that you reduce. And you just, closing mistakes used to be pretty common when it was paper. And I can't blame the title company for it. I can't blame my closers for it. It was just excess communication that didn't benefit a thing, that just caused things to be missing. That was what it was. So right. Yeah, it's just been a windfall for us.
Fantastic. Thank you. Okay. We need to answer this one quickly because I've got two that we got to get through really quick. Any thoughts on some future trends that's coming as it relates to the technology in the mortgage industry? Any thoughts from you, Jeremy, on what you see coming?
I think really the two things that come to mind is the Secure Act. This has been kind of tossed around in Congress quite a bit. Has not been signed into law. So I think if that happens, which it sounds like it probably will, maybe next legislative session, we'll see. I don't know. But we talked earlier, Leah showed the chart of we got 44 states adopting RON right now, but from a GSE perspective and an investor perspective, it's like, oh, I've got all these different state rules that I got to worry about, right? And so if we get federal legislation on this, I think it might help streamline adoption nationwide and make things a little bit easier. I don't know. I haven't read the bill. I don't know what all is in there, but I think that's kind of the intended purpose. So that, and then I think a more universal transferability between the e-vaults that are out there. Most of them, so the eNote is a Mismo Smart Doc, so it's got the same standard. It's really pretty much universal, but I have heard, I don't know this for sure, but I've heard that some of the eVault providers have, maybe they'll add a few custom fields here and there. And so I know Mismo has a whole committee that is working on eVault interoperability to make that a little more streamlined. And so I think those two things will help just circulate nationwide.
Thank you, Jeremy. Leah, any thoughts on this question?
Yeah. Dan, remember this date is the date I told you about e-chattel. We have so many lenders that are collateralizing these loans and increasing their liquidity with eNotes that now they want to do it for contracts for solar leases or commercial loans or maybe all their auto loans. So that's what's coming next, I think.
Fantastic. Okay, last question, Jeff. Do you have any advice for your peers? Any of your fellow lenders out there? Would you like to pass along any advice to them?
Move forward. I don't know why you wouldn't. And all of those naysayers about the process, you just have to educate them and let them know that it happens. Get the CEO of your company pushing for it to happen. Do I get an opportunity on what I see coming for technology, or do you got time for that?
Sure, absolutely. Go right ahead.
Something that I'm working with in my role on the TMBA board is the objective of taking smart docs and moving it forward. With that, the CD is Mismo has made the CD a smart doc 3.2 version. So what we'd like to do is push that over to the title company. So effectively, they have all of the fees that we're charging, what they're charging, and can be verified electronically with a smart doc. The smart doc is basically a document. It's an electronic document that has a PDF, Adobe Acrobat, if you wish, with the metadata surrounding that created the document is part of that smart doc, as well as it's encrypted, just like the eNote. So that way a computer could read it, as well as you being able to physically read it. We're working on a project with that. Matter of fact, I think DocMagic is also working on a solution for the CD to be that. But that would, just Jeremy, think of what that would save you. And we'd like to get that pushed through the Texas Land Title Association with the TMBA's objective to make that happen. That's another thing that TMBA is doing for you.
Fantastic. Thank you, Jeff. Leah, do you have any closing comments on recommendations or advice to lenders?
Yes. Don't wait. You have got to be putting yourself out there with some version of e-closing. Borrowers expect to click button, get mortgage. Don't get left behind with your borrowers and your bottom line.
Very good. And Jeremy?
Same thing. I tell people all the time, this is Blockbuster and Netflix. Blockbuster laughed Netflix out of the boardroom and could have bought them for $1 million because they said, no, our business model's solid. There's nothing wrong with what we do. This is literally the same thing. This is not an if, it is a when. We're seeing rates come down. This is super easy for refis, but what's going to happen is the lenders that have not done this are going to wake up and say, oh, shoot, I wish we had started doing that when they want to do it for refis. This is not an overnight process. It takes a little bit of time. When you talk about eMERS registry and the eVault, it takes some time to get this set up. And you're going to wake up next spring and really wish that you had started it, when you watched that TMBA webinar back in September.
Okay. Thank you very much, Jeremy. I'm sorry, folks. This is my fault. My computer doesn't like me very well because it has not shown me that we have any questions, but we do have a few. And for those that want to stay, Stephen, is it okay if we try to answer these questions, or do we need to be done?
Yes,
Okay.
of course. Please proceed.
Okay, I'm sorry, folks. All right, question. Is there any indication of how many counties that do or do not register the security instrument that is eClosed? Would that not become an issue? In jurisdiction? Leah, what do you think?
Yeah, CSC and Simplifile are two e-recording platforms that have been mentioned on this webinar. Go to either of their websites. I have them bookmarked because they will tell you by state which counties e-record. Fortunately, 90% of the population lives in a county that can e-record. So it's not too big of a concern at this point.
Can I touch on that, Dan, as well?
Yeah, sure.
From the title company perspective, one thing that's important to know for Texas, I cannot speak for other states, but for Texas, you got two different things to consider with that question. One is, can the county e-record? And the other is, will the county accept an electronic notary? Those are two completely different things. Because in Texas, the e-recording should be, unless you get a small rural county clerk that's going to push back, that should be irrelevant because we have a papering out process that they should be forced to accept. So if we do a completely paperless closing and the county says, we don't e-record, then there is a process, and your doc prep attorney should be able to walk you through this, of papering that out and giving them a physical document that they can record. So e-recording should not be a barrier to do this. But we have had some counties say, we will not accept an electronic notary, and that we can't do anything about. So those are separate.
Okay, another question. Is IPN being lumped in with Ron for the purpose of this conversation? I can see why that might have been a question. We were addressing both. We were talking about Ron, security, fraud. We were talking about the ease of use, but IPN, Jeremy referenced it, where you can actually do that. You can do the electronic notarization with an actual, you can do that in person. And you can also, so yes, and I see where you might have been a little confused. If you need more information on that, or please let us know. Send us an email. We'll be happy to get you the technical person that can help you. This is to Jeff. If you had to do it over again and you were starting from scratch with no e-closing platform at all, would you work your way into it with a hybrid program or a full e-close, producing eNotes from the beginning?
I would start out with the full platform, so that way, people don't get confused on the process, and let them opt out of what they don't want to do, but go with the eNote, just right off the bat. That's the first thing. That's where you get the biggest lift on, at speed to sale on the transaction. I would build the whole platform right off the bat, and if people didn't want to do various parts, let them, opt out of that. So that way you have they're embracing the full process, and they get to have the benefit right off the bat. And I think your salespeople would appreciate that, and that there would be one training process. So I'd go with the full platform and let them opt out of things if they needed to. If you've got an investor that doesn't take an eNote when you sell the loan, things like that. Matter of fact, we just tell investors that other than one, which we're going to go through their pilot program, if you don't do eNotes, we're not selling you business.
Very good. Okay, Leah, can you answer this, please? Says, what is the average cost of the eVault, as this has been a prohibitive factor previously?
Dan, if I told you the average cost in the industry, I would scare you. So I'm not going to. But let me speak for Doc Magic and say that the average cost of that standing up the eVault is not cost prohibitive, because the eVault's not our main revenue source. We want to increase eNote adoption as much as possible because we're providing those eVaults to those warehouse lenders and those investors as well. So to stand up an eVault with us, the average is $2,500.
That is, and if you said a key thing that I want everybody to hone in on, if you do one thing, if you're an eVault company and that's all you do, then you've got to price it such that it can support your company. If it's just one thing of many things that you do, it doesn't have to be so expensive. So thank you very much, ladies and gentlemen. I hope you've gotten something from this. We appreciate your time, and I'll turn it back to you, Stephen.
Thank you, Dan, Jeremy, Leah, and Jeff for taking the time to share your knowledge and experience with us. Thank you all for joining us today, and we hope you have learned more and enjoyed the presentation. TMBA continues to bring you great webinars like this one. Please visit our homepage at texasmba.org for upcoming webinars and previous webinar recordings. Thanks again, everyone, and that concludes our webinar.